Hi there, welcome to Kneppy Invest. Time for another financial year 23 result video, viewer suggested edition. And this viewer suggested company is called Pureprofile. T code of this company is PPL. Pureprofile is a data and insights company providing online research and digital advertising services for agencies, marketers, researchers, and publishers. They have two products or types of products and services. By far, the biggest revenue generating product or service is data and insights, which is conducting market research and accessing insights and campaigns through their self-service platform. They also have Pure Amplify Media AU and Media UK, that is buying and selling online advertising inventory on behalf of advertisers and publishers. So 93% of their revenue is from data and insights. In fact, that part of the business had a profit of $9.8 million, which is quite high. 70% of the revenue is generated in Australia. This company listed on the ASX in 2015, so it's been around for a while. It is loss-making in financial year 23, but EBITDA was 4.3 million. And the main reason there's a difference between the profit and the EBITDA of this company is because of depreciation and amortization, plus share-based payments. So always be wary of EBITDA, particularly companies with software, because they could be capitalizing it. And if they do capitalize their software development, that will make or lead to a difference between, or sometimes a fairly big difference between profit and EBITDA, because they have to amortize that or depreciate that. And that can be a pretty big depreciation or amortization. So let's get in, or actually before we have a look at this company's financial year 23 results, what are the next 5 companies I'll be featuring in this particular series? The next 5 companies I'll be looking at include Alcidion, Perpetual, EZZ Life Sciences, Elders, and one of, if not the biggest company on the ASX, BHP. Now let's have a look at Pureprofile's financial year 23 results. Is there anything interesting in these results? So let's have a look. Revenue 47 million. That was a nice increase from last year, 23%. Again, this company is not profitable. In fact, loss-making by $1.4 million. Gross margins, fairly nice at 54.5%. Operating cash flow, 2.1 million. So this is where we see the difference between the operating cash flow, free cash flow, and profit. So in the operating cash flow, $2.1 million. They don't include that capitalized research and development. That's why there is a bit of a discrepancy. I won't call it discrepancy, but there is a difference between the operating cash flow and the profit. Free cash flow negative $400,000 and net cash of $1.7 million. So that is one thing I would be concerned about moving forward. If they are burning through cash and a fair bit of cash, they might have to do capital raisings in the future. And if really the equity markets don't turn around and companies like this keep seeing their valuation drop, that can be a fairly expensive capital raising. And when I say expensive, I'm meaning for shareholders, being it would be highly dilutive for shareholders if companies do capital raisings at the bottom of this particular cycle. $4.41 million of equity, slight increase on last year. So if this company can become quite profitable, say $1 million, does return on equity of 25%. That would be quite nice. But return on equity is negligible. Return on invested capital, negligible, because this company has no earnings at all, because they are loss-making. 1.14 billion shares on issue. And for a small company, that can be a problem, particularly if the share price gets below 1 cent. And you'll see a lot of day traders, maybe not day traders, but pip traders, just buying and selling a 0.1 change in the share price. The share price of Pureprofile, as I'm recording this video at 3:37 p.m. on Monday, the 9th of October, is 2.7 cents. At 2.7 cents, this company has a market cap of $31 million. Another thing I looked at is over the last 8 years since this company listed on the ASX, how many years has Pureprofile been profitable? And it's 1. So not a good strike rate, being profitable 1 year out of 8. Now to some valuation metrics, and of course the P ratio, well, it's going to be negative because earnings is negative for this company. Price to book ratio 0.7. One thing this company does have is pretty good revenue. So it was at $45 million of revenue. So that's probably one concern you could say, that amount of revenue, but they're not profitable just yet. Now, I'm going to emphasize that just yet. Just because they've only been profitable 1 year out of the last 8 doesn't mean they can't be profitable 7 years out of the next 8. So it's one thing to keep an eye on is whether this company can become profitable on a continuing basis. Now, they do have operating cash flow because they do capitalize research and development. And so we can calculate the EV to operating cash flow, or the price to operating cash flow. And I did calculate that particular metric, EV to operating cash flow, and it's 14.8, which is not too high, not too low. So 14.8 is in the nice range for a company like this, particularly if they are able to grow and find some scale in their business. You could even argue that is actually fairly low for that type of company. Also did a reverse DCF based off the operating cash flow, because that's the only positive earnings this company has in terms of operating cash flow, free cash flow, or earnings per share. And to justify the current valuation, this company would have to increase their operating cash flow at 9.4% per year. And I definitely think the company can do that over the next 5 or 10 years. That is definitely a possibility for this company. Now, one thing I like to see or look at for all companies is revenue growth. And for some reason, Pureprofile didn't exist in ticker, TIKR. It came up as another company. So I had to go to Guru Focus, which I don't like their charts compared to ticker as much. But this is the company's revenue history going back to 2016. And to be fair with you, this is not the chart you want to see when it comes to revenue. I want to see revenue growing. And according to Guru Focus, the revenue growth trend line is an increase, it's almost flat, but the growth rate of revenue is 0.4% per year. So not exactly what I want to see, but you could say and argue that revenue has been increasing since 2019. And I do remember the share price of this company having a massive hit back in 2017 and 18. And one of the reasons that this company had a massive hit was because of decreasing revenue. So maybe the company has turned things around, and you could say revenue is now on the increase. Now to the charts for, well, only one chart for Pureprofile. I'm actually looking at the weekly chart on another screen right now. And back between about, we'll say the end of 2016, all the way through to about 2019-20, the share price of this company was in a massive downtrend. In fact, the share price of Pureprofile fell from about 42, 43 cents all the way down to a low of around 0.4 cents, actually 0.2 cents back in April of 2020, so around about the end of the COVID-19 financial panic. So this company did experience some significant problems between 2016 and 2020. And the share price has turned around since then. It has grown from that low of 0.2 cents to a current share price of 2.7 cents. But there was a little bit of hype in this company back in 2021. You can see the share price in a beautiful uptrend, particularly in the last about 4 or 5 months of that particular year. And the share price did reach a high of around about, we'll say that's 8.8 cents. In November 2022, now 2021. But since that high in the share price, the shares or the chart shows a pretty distinct and well-defined downward trend, and the share price has been dropping fairly consistently since then. Now, you could argue again that there is a floor in the share price at about 2.2 cents, which was reached, or 2.4 cents, which was reached in April of this year, and the share price has not fallen through that. It's hit it a couple of times and not fallen through it. So it seems like there is a little bit of support for shares at 2.4 cents. And to be honest with you, the shares are only 2.7 cents, so just above that support level. So possibly a low risk entry point around these levels for Pureprofile. And this company could become interesting if they can show the market that they are profitable and keep showing the market they are profitable on a continuing basis. That's all I have for this look at Pureprofile's financial year 23 results video. If you have any questions about this company, I would love to hear from any current shareholders of Pureprofile. Why do you own shares in this company right now? So if you are a shareholder of this company, I'd love to hear your opinion on the company, maybe opinion on the management, that sort of thing. So leave your thoughts in the comment section of this particular video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.